What is up, everyone? Today was a great day. Great day. We stuck with our process. We stuck with our strat. We did not deviate from anything. And we came out with the dub. Life is good. I'm telling you. Follow your strat. Do not deviate from it. Do not overtrade. I've been there, done that. And let me tell you, after all these years, I say all these years as if I've been doing this for 20 years. I've been doing this for like 4 years. And so many times I would just overtrade. And it gets me nowhere. But now I've finally just been able to just take a chill pill, So I take a chill pill, follow your rules, be patient. Honestly, that's it. So I'm going to go over the trades I took today. I only took 3 trades today, which, it's pretty decent. So the first trade I took, if we go to the 377R, I saw that, I believe it was this one. Give me a quick sec. Yeah. All right. So on that 377R, let me bring that back up. So on that 377R, which is just this up close candle, you can see that we retraced back into the 50% level. Decent bullish momentum. Good numbers, good delta. So it gives me some confidence that we will be pushing up a little bit, but definitely had to kind of be a little bit wary of this area because it's kind of in a supply zone. It's been in a supply zone. It's just kind of been rejecting this area, and then this was an old supply zone that turned into a bit of a demand. So just had to be careful around that area. So for the 377R, I want to look at the 89R, and it's the same thing. I'm telling you, this is fractal. Fractal meaning the same stuff happens on all time frames. I truly believe the market is fractal. It doesn't matter. Like, I can show you a chart. I could show you this chart that you're looking at, which is the 89R, and then I could show you the 377R, and you would have no difference. I mean, except like if I got rid of this one right here, like the very last candle, you would not be able to tell the difference at all. Or even better, like if I bring this 34, if I bring this 34R over here, you would not be able to tell the difference at all, except like obviously the colors of the bars. But besides that, you would not be able to tell the difference whether one is a higher time frame or a lower time frame. You're not going to be able to tell. So that's what it means by market being fractal. So going back to my first trade idea, we had a decent pullback into the retracement area on the 377. Same thing as always, we look for some sort of box to form, which for me is this. And by the box forming, I mean want to have a good series of some down close candles that come into the retracement zone. Then you want to have a pop up, and you can see we have a pop up that goes up to here. So this is like a high that's created, and then this is a low that is created after the high. Let me draw it out real. And you can see that this low, the bottom of the box, is not broken out. So what do we look for? We look for a confirmed breakout above this high, which we get right here on this candle right here. So now that we have a confirmed breakout, we want to see and wait for price to retrace back into our newly formed demand zone. which will be this area from this high to that low, to this low. So this big box is our original demand zone, but we're just trying to see if some highs are created, some lows are created, and if the high is taken out as it is here. So now I'm just going to get rid of this box just to make it a little bit clear. So now this is the box that we're focused on. So now we wait after price is able to close past this high, we wait for price to kind of retrace back in anywhere into here and be an up close candle and push up. As you can see, it does that right here. So what I did for this specific trade, I think I took 3 different entries on this, just on this one trade idea. And the reason why I took 3 different entries was because on the lower time frame, on the 55, so this is the same exact box that's drawn right here, the same exact thing. So this is the high, this is the low. We get that confirmed breakout right here. Then I just wanted to wait for price to come back in on the lower time frame and be an up close candle, which it does here. And as you can see, I enter right around that area. It's a little hard to tell, but you can see I probably entered around 975, maybe 976 is where I entered at. And then, just a quick 10 points. So I entered right around here. I entered about there. And then just a quick 10 points got me out like right about there, right at the top, which was trade number 1. But that was due to the lower time frame, not the higher time frame. I went on the lower time frame and I saw that it was moving just as well as the higher time frame, which was the 89 ARF in this case. And that's why I decided to enter. I went for a quick long, and it worked out in my favor. So now we get rid of that 55. Since I already traded on that 55R for this setup, that no more on the 55, no more. Now we go back onto the larger time frame and try to see if the play is gonna happen and hold as well as it did on the 55R. So now that we have, remember this entry right here and this sell, this is based off the 55. So now this one and this one are based off the 89R. So why did I enter here and why did I enter here? I entered here, down here, for my second trade because I've noticed that if the very first candle after the breakout candle, so this candle right here, if this candle touches the zone that we're looking at, which is this box, and it's an up close candle, chances are the following candle is going to be a down close candle. And then you can enter on the close of that down close candle with a stop loss right below this entry candle, and like that risk to reward ratio, it's fantastic. That's what I've noticed over the past trading days. I'm not sure if this is like, a definite thing. Nothing in the market's definite. But it's just something that I've just realized. So I kind of took that into caution, I don't know if that saying is, but you know what I mean. So yeah, like if you really wanted to, you could enter here and then easily gotten the 10 points out up here, even like 20 points, 30 points, whatever. You could easily go for a little 1-to-1 for sure. And then at the 50% level, just put your stop to break even. So like once this orange line's touched, break even, and you can exit like near this blue line, which is just the 1-to-1. Damn, this song's decent. Anyways, so back to the second trade. I kind of waited for this candle to close, and then I was a little hesitant on entering right away because I get a little scared. So I didn't really want to enter right away. I wanted to see a little bit more of a bounce. And, it did end up bouncing up like another 5 to 7 points from my entry. So I moved my stop loss to break even, and I ended up just getting stopped out. But as you can see, if I just stuck with my strat, I would have gotten my target filled up here. And then once I saw that the following candle after the down close candle was an up close candle and did not break this candle low, I was like, all right, I know we're gonna go up at least another 10 points. So that's when I re-entered here. I had my stop loss down here, just quick 10 points. It's like a negative 0.5 risk to reward, or 0.5 risk to reward ratio. So I'm risking $100 just to make $50, but for me, that's what works. You don't have to have these 1-to-3, 1-to-2 ratios. It's I would say it's not as common, to be honest. Like, yeah, you see it every once in a while online, but just for your average Joe, it's a 1-to-1 or even like a 1-to-0.5, which is what I do, is perfectly fine. I like it. It's what works for me. You just got to find out what works for you through a lot of hours of back tests and just watching your charts. Just got to be patient. So those were my 3 trades for the day. And as you can see, it's 3 trades based off the one setup, based off from the 377R. And it's just that one trade with looking at different time frames. That's it, y'all. Have a good one. Peace.